Alright, real quick again, I wanted to even add a tad bit more to that 3-bar breakout in my previous video over breakouts failing, and kind of more of my thoughts. So earlier we looked at over here, right here we had a spike up, but failed to really break above, so possible final flag, maybe 2 legs down. We had the second leg trap, and the odds were you'd get a second leg down and reversal up, which is what we got, and we got a lot of buying pressure. So to recap, bears who would sell would probably get out above and look to sell again, but it went always in long, so here you probably expect more of, and this is just too many bull bars. I mean, the bulls just dominated. The bulls who bought this low and more lower made money. So let's look at another pretty good example. So here, note that we got a bear breakout, bad follow through here, and second leg, a very small second leg down. I want to see something real quick. So this low is 82, and these lows are okay. So think about see what's going on here. You had a lot of traders buy at 82 pips, so 1.0882, and they tried to buy more 10 pips lower at 1.0872. The low of this was probably 7.3, so you had a lot of buyers in this range trying to buy 1 pip lower, which is basically the equivalent of 1 point in the E-mini. So let's flash forward a little. Let's go over here for a minute. Same thing happened over here. So, clearly always in short. Arguably this was a minor lower high and this was more of a major. But regardless of it, this doesn't look like a strong breakout. This looks better, but again, where are the consecutive strong bull bars, like this? And then here we clearly reverse down, 3 pushes up. But anyways, regardless, we're probably always in short, but, you got to be kind of suspicious. But you sell this close. And you can see we got more down. So this is the scenario where traders have 2 options. Trading range day, so you expect that the traders who buy this low and buy more lower, theoretically, the range is still pretty small, so you got to factor that in. But in theory, they buy this low and buy more lower, or 10 cents lower, and they, worst case, they'll avoid a loss, which is right here. Average entry price is break even, or they'll make money. Same thing up here. If they buy here, they buy more above this bar over here, and they'll probably avoid a loss like so. So that's one option for the traders up here. Other traders are selling here, and they'll scalp out in theory if it went 10 cents. It probably didn't, or 10 pips. Other traders will simply sell more higher up here. So let's say this is 95. Couldn't sell that. Maybe over here. So 89. Yeah, okay. So in theory, bears sell this close, sell more 10 cents higher, look to get out back down here. So either traders hold betting the first reversal up is going to fail and we'll get a second leg down, or traders say micro double bottom. I think we'll probably get a deep pullback. A lot of swing bears get out and they'll look to sell again. However, we're starting to stall, and it's somewhere over here, maybe here. You can see a lot of bears will go back to short, but bulls made money buying below bars, so it's important. And maybe they sell this close, but again, double bottom. You had a lot of traders trying to take profits at this low close. Bears get out again. Aggressive bulls buy, saying, hey, double bottom, if we're lucky, maybe we'll get a breakout and we'll test this high. But notice this decent bear breakout, but here, bear bar closing on its low, bear bar closing on its midpoint, doji. Bear bar closing on its low, another bear closing on its low, strong bull bar. This looks like a leg in the trading range. If it looks like a leg in the trading range, it's going to fall below support, the entry price for here, but maybe not below here, or it might fall a tick or two below and turn up. So let's pay attention to the buying pressure. Well, theoretically, bears get out here. They definitely get out probably after these 3 bars, even though you're at the moving average. This just looks too strong. 3 bars up, 4 bars up, 5 bars up, 6 bull bars in a row. The first reversal down is going to fail. The character of the market is changing. Just like I talked about, I don't want to go too fast. Okay, just like I talked about over here. Just be patient with me. I'm not used to there yet, 24-hour. Yeah, just like over here, the character of the market changed. Lots of bull bars. Again, it's important to notice buying and selling pressure. Over here, lots of bull bars. So we have to be thinking, okay, strong enough breakout, maybe measured move from open to these closes. Maybe leg 1 pullback, leg 2. Regardless, let's take it to the right of the screen. Strong enough breakout, first reversal down will fail. No reason to get out of the short, or no reason to get out of the long. Obviously, probably get out of the short, even though you're at the high of the trading range. I think we're probably going to get up here, if not up here. Again, strong bull bars. Another bear bar, arguably low too short, double top up here, but really just not looking that good for the bears. And then, arguably a small gap, but it closed right here. And then you got the bear breakout, but the bears, this to me is more of bears panicking. And I say that because of this. They sell down here, and they're trying to get out. So maybe they sell this close, sell this high. Now, one little caveat, whatever you want to call it, one little tidbit, if you will. Yes, this is sell to close, but you have to understand this was really the last sell to close bar. Why do I say that? Sell to close, sell to close, sell to close, sell to close, sell to close. Probably going to get a disappointment bar. Usually in a trading range, you get 4, 5, maybe 6 bars down. You expect a disappointment. This is already disappointing. Here's your disappointment. So bears sell this close. Disappointed. They look to get out of break even. So here, they already think, okay, probably going to go back up to here. Not really a great sell to close bar. Neither is this. So theoretically, a lot of traders either got out somewhere over here, at their entry, the last sell to close, if they were trading sell to close, or they sold here, and maybe sold more. I don't know. Maybe if they're lucky below that bull bar, but really great. Maybe a lot of choices. If they were smart, they sold this close and they sold this high and got out break even. But this is bears trying to get out of break even, and another 3 bars up. Maybe the bulls. Do always in bulls get out above here if they were long? I think you can. We're at target, logical targets, these lows. But again, really not a great place to short. But I think it's okay to get off the long. And kind of another situation. Why I say it's probably a good place to get out of the long is, you have to look again at the buying pressure. We're starting to go sideways. We rallied up. Odds were we get a second leg up. We have a second leg in form of a wedge. Bears made money selling this high, which is also due to this. And we may stay above this high. So you have to also think traders, they sell this close, sell more 50%, stop up here. They can probably avoid a loss. So I think this is also due to, I don't get too complicated, but traders sell this close right here. They sell more at 50%, and they look to get out. And you can see it's about close to accurate. So again, I trade always in, so I'm gonna a lot of times refer to always in trading, or otherwise known as swing trading. They really go hand in hand. I'd probably get out of a short below here, or probably just on one of these closes. Maybe here. I just exit. You're high in the range. We're probably gonna, trading range. I'm thinking we're probably gonna fall below here. We might fall all the way back down to here. I don't know. But again, wedge top, 2 legs down. This just doesn't look. Sell climax, bad follow through. Another bear bar, bad follow through. Another bear bar. Outside down, but not great. Bull bar closing when it's high. We fell below here, immediately found buyers. It's getting pretty ugly. So, if I was short, I'd probably get out above here. And, do always in bulls buy again? Well, we did what I thought. We fell below here. Arguably, call it some sort of higher low major trend reversal. I think it's okay to buy, but I really don't. Again, I don't think it's very great. And then here, well, it's okay to buy now. Clearly, we're always in long, and first reversal down will fail. But you got to be careful. You're at the high of the range, so we may test up to here. And there you go. See, bad follow through. So, clearly always in long, but it's a warning. You have to be careful. Big tails at the high of the range. I still think we're going higher. Here, that's difficult. I think it's okay to get out of the short, get out of the long here. To be honest, I probably would. If I bought up here, I'd probably get out below. Just because this really isn't doing the bears. The bears haven't done enough, but the bulls are not doing what they should be doing. And then we got another breakout. So, again, not an easy move. And this kind of, another thing I want to talk about, one thing that's kind of going on, and it happened these past few days in the E-mini as well. When you get these breakouts and bad follow through, breakout, bad follow through. So, high to buy, another breakout, bad follow through. Usually, the worst thing you can do is, you buy up here, you get out. You buy again up here, you get out. And it's really easy to get chewed up if you're not careful. We had that happen yesterday over here. So, bull breakout, bad follow through. Bull breakout, bad follow through. Bear breakout, bad follow through. Another bear breakout, bad follow through. Another bear breakout, bad follow through. When you get consecutive climaxes or sell climaxes, buy climaxes, a breakout's a climax. Especially when you get big breakouts with bad follow through, the odds increase that you're going to get a reversal, and it could be fairly sharp. That's the problem with. Well, this is just climactic in nature, but big breakouts, tails, bad follow through. Another big breakout, tails, bad follow through. Bear breakout, bad follow through. Another push down, bad follow through. Another push down, bad follow through. And it's kind of the same logic I was just talking about in the euro. You get a breakout and then you get bad follow through. When is it okay for the other side to start taking stop entries? And when does the with turn traders or the always in traders, when do they get out? So it's kind of one of those. I was saying over here, do always in bulls get out? Well, they can, but it may go higher. But it's really not that simple. I think they can get out. I think they can get out here. I don't think they technically. There's probably sellers up here, so it doesn't. Just because you a lot of bars up, until we break strongly above it, then we haven't broken above it. So, and yeah, we broke above here, but the problem is look to the left. Now there's clear. I'll put it this way. Breakout, possibly in the middle of a range, so leg one, pull back, leg two. In other words, here's a leg up, here's the pullback, leg two. Maybe many ways to draw it, and maybe that's leg two. And I know that seems weird. This is, arguably the first leg up. Al explains a lot more about drawing leg one, leg twos in his new course. You can see it on the sample size, but leg one, and then we started going sideways. So maybe that's the end of the first push. And a lot of times if you go sideways after a breakout, very often at the resumption, you get leg two. So is this leg two? Well, we clearly broke above it. So maybe, think of other places. Maybe this is the start of leg two. And I know it seems weird, but I think you can view it that way. I think better, more importantly, it's just something like that, or maybe here's the middle of this breakout. Regardless, you have bad follow through. I pay attention to channels. We're breaking above a channel, but what I pay most attention to is what's happening after the breakouts. More and more traders, when they see breakouts, bad follow through, low too short, and it gets confusing whether or not you should get out. Such as here on this day, full breakout, strong enough for a second leg, have our second leg. Do traders get out here? Maybe. Then you get another breakout, bad follow through. Do traders get out here? Well, maybe. Another breakout, bad follow through. Excuse me, bad follow through. So you don't really know when traders get out, and it confuses things. So, strong enough breakout, second leg. Again, strong enough breakout, maybe a small second leg. Maybe this is all we get for a second leg. If I was always in, I was in over here, I'd probably get out below here. And that's why. At some point, everyone gets trapped. That happened again over here. Bulls buy this high one. They fail to do what they need to do. They get out break even right here. So you buy at 38.50, price goes to 38.39, it lets you out. Some traders, they buy again up here, or they buy above here. Maybe they bought here. Other traders did. If they bought here at 38 even, price went to 38 even, didn't let them out. So you're beginning to have traders trapped. Traders buy here at 37.25. They had a chance to get out. And you can see over here, kind of this is a miniature version of all this and this. So sell off, bad follow through, another sell off, bad follow through, another sell off, bad follow through, small sell off, bad follow through. Bulls probably buy above here, but look what happened. Disappointed, tried to get out of break even, they couldn't, and then we sold off. So I hope that kind of makes sense. So to wrap it up, expect second leg down, and really it's about trade management. That's the biggest thing I would say. Kind of over here, breakout, but lots of tails, deep pullback, strong enough breakout for maybe a second leg up. However, you've always got to be concerned when you see patterns like this. Breakout, pullback, another leg, big bull bar, but no follow through. The reason you got to be concerned is because of this. Traders may sell this close and use a stop, a measured move up from here to here, up, and they expect price to fall below here. So a lot of traders see it as a gift. They get out and they look to buy lower. But again, even over here, strong enough sell-off, but you're at support, so it might be always in short. In this sense, we'll get another leg down, but a lot of traders won't sell down here because it's at the moving average. They won't sell higher. So that's why you have to go sideways for a while. And even over here, leg one, this might be the start of leg two. So leg one, pull back, start of leg two, maybe over here. Or maybe it was, here. It really doesn't matter. But as you can see, there's, this is another, I'll kind of zoom to the right. This is kind of another situation. So exhaustion, expect two legs down. So bear breakout, possible second leg down. Bears are hoping for a minute, at worst case, a trading range. Bulls want a breakout above. But again, every time we rally, we sell off. We rally, we sell off. There's, 3 bull bars, but good looking bull bar, bad follow through. We're getting bad follow through on both sides. Now all of a sudden we got, a lot of bear bars down. We may get a breakout, but again, bad follow through here. We got a bear breakout, and we got this. So bulls, on the other hand, is kind of that micro double bottom problem. So we had a double bottom, broke below it, so we're trying to form a wedge. 3 pushes, 1, 2, 3. Decent buy, bulls will buy up here and buy more lower and get out of break even. Well, if they all scalp out, we form a double top. Bears want to break out below. However, the problem is we're getting a lot of buying, there's a lot of buying. So at some point, all the bears get out. Do always in bears, so let's say you short here. Do always in bears get out here? Probably not here. Maybe, but probably not. Get out here? They probably do. But if they do, they got to get short again in theory, and they sell here. Do they get out here? Probably not here. And they probably just get out on the close. I mean, this just doesn't look good. So we may test all the way back up to here. And again, this still doesn't look good over here. Big tails, another big tail. Lots of selling up here. We went a few pips above, sold off. Always in short below probably, but I want to see the follow through. Clearly always in short, sell up here. And we're getting a lot of bear bars down. First left should fail. And, but now 3 pushes down. So what do traders do? I think it's a little bit of both. I think some always in bears get out and look sell, higher or sell pullback. Others hold, betting this won't be the low. And you can see the danger in holding. So that's kind of another thing, when you just quickly break below something, you've got to be careful in the sense, tails, bad follow through, and then clearly always in long, but starting to form a trading range. But I think it's okay to buy, betting the first down will fail. But that, you gotta, that's suspect. 3 bars up, bad follow through. I think it's okay to get out below here, but you may get another leg up. And it's just trading range price action. Look to the left. There you have it. So we just keep going sideways and sold off. And, again, this is one of those. Let me put it this way. It's kind of the last thing I'll say. I meant to make this video short. Ended up making it way longer than I thought. And I expected. Trading, 2 legs down, possible second leg trap, possible failed breakout down here. But even if you held short and, let's say you put your stop up here. Well, you never got stopped out. So you could sell more higher, or you could exit and look for a good sell. You say, okay, maybe always in long, maybe I'll buy, but I'll probably get out here. Never can play short, and then you get, here. Somewhere you have to sell again. And if you did, strong enough breakout, this should fail. Strong enough breakout to downside, climactic, so I'd probably get out above that bar. Outside up, definitely get out. And I look to sell again, but 3 bars up. So we may have to test down, but probably buyers below. I think traders will, they can probably buy right here. But if they do, management's difficult, because if you if you fall on a new low, you either buy more lower or get stopped out and re-enter, and then you get that. So you either are long, you buy more higher. But then again, you got that. All right, so I need to wrap this video up, but I hope this helps.